Welcome to the 3 in 10 podcast. I'm Scott Slayton, partner and chief strategist at Capital Creek Partners. In each episode, I'll give my brief perspective on 3 things we think market participants need to know this week, and we get it all done in 10 minutes or less. For additional resources and analysis, please visit our website at capitalcreek.com. Here is your starting lineup for the 3 in 10 podcast for Thursday, October 9th, 2025. We're recording at 6 p.m. Eastern Daylight Time. We are recording a day early before we head to Dallas, Texas for the annual Red River rivalry game between Texas and Oklahoma. This will not be my first Red River rivalry, and I hope it will not be the last, but it is one of the great events in sports that I have ever witnessed. And I'm certainly hoping that our Texas Longhorns can show up and be victorious this year. Now, instead of the usual 3 in 10, today is going to be about 1 in 5. We have one thing and one thing only to discuss today. It is gold. Gold breaches 4,000 per ounce for the first time in history as the flight from fiat currencies continues. Many of you, our faithful readers, know that we began this year with a bearish view on the US dollar, and we wrote a report entitled A Deep Dive on the Dollar back in February, where we called for a 25 to 30% devaluation in the dollar against other fiat currencies over the next 2 or 3 years. Well, about 1/3 of that has happened so far, but the real devaluation has been against gold, not other fiat currencies. The dollar's down about 8 or 10% relative to fiat currencies, but it's down over 50% against gold. It's also down against silver. It's down against copper. It's down against platinum. And of course, it's down against Bitcoin. Gold is now up a staggering 53% in dollars. So the dollar just devalued against gold in 2025. This is similar to what happened in 1979 and 1980 when the U.S. was suffering from very high rates of inflation, very low confidence in the government, and very low confidence in the Fed. But all fiat currencies are debasing relative to gold and these other hard assets. We have invested and traded gold since 1993, and we have never seen action like this. We have to go all the way back to the late 70s, early 80s to see anything like this. But we remember that time, and we remember that peak in gold in 1980, and it was a peak for the ages. We did not return, even in nominal terms, back to that 800 plus gold price for decades. So I think the time has come to sell some gold into this historic strength. Just trim part of your position. That's what I think is appropriate. Maybe even 25% of your position. Who knows where the top is? And it's probably not even here. We think gold probably does really well into the end of the year as one of the best performing assets so far this year. But it has triggered a bubble signal on one of the indicators that we watch, and it has become very extended here with an RSI over 90 and with a spread between the current price and the 200-day moving average of more than 20%. Those are classic signs of a parabolic blow-off. So keep some because it likely goes higher. Keep some because it's a great portfolio diversifier and a proven long-term hedge against inflation. And as my friend Stephen Lee Jen says, gold is being powered by a structural divestment from fiat monies and money printing. Governments have become too indebted, and they've been running structural fiscal deficits for too long. The public and investors know this, and therefore they are moving their money out of these paper fiat currencies into harder assets that can't be printed and that have a proven history for years, decades, thousands of years in the case of gold, of holding its value and protecting wealth. So we will leave you with that today. And as we always say, do the work, endure the pain of gain, and have investment courage. Go Horns.
The information in this podcast is educational and general in nature and does not take into consideration your personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategy or investment may be suitable for you, consult the appropriate qualified professional before making any final decision.